We will get started, just for the sake of everyone's time. I'd like to start by, of course, thanking you all for being here today, and welcome to your Q&A connection with MNP. Please note that this event is being recorded so that a link can be provided to registered attendees along with a post-event survey following. If you can again turn on your cameras when you are being asked to speak or anything like that, we'd appreciate it. Otherwise, I can understand everyone's in a workplace and may not be able to. Just a couple of housekeeping items worth mentioning before we begin. Currently, we have asked you all to be on mute. Please keep your microphone on mute until the question and answer portion of this session, which will follow the presentation. A huge thank you for being here today and for taking the time out of your busy day to be with us virtually. We're very grateful to have our presenters, Brandy Horn and Carmen Jacoba Heist, here from MNP to help us better understand how to navigate government subsidies pertaining to COVID-19. With all of our events, I do like to point out that we have a few members that are influencers attending today. An influencer is part of our tiered system. They are here to champion business and invest back into their community. And that would be the City of Airdrie and Woodside Golf Course. If you guys just want to give a wave, that would be fantastic. Before we get started with MNP, I would have hoped Patty J would have been online, but I don't actually see her here today to speak on behalf of Community Futures. The one comment, I'm actually sending this out next week, is, tomorrow actually, there is funding through Community Futures West for the gaps in something that you might hear more and more about is if you've only been in business for under a year, you may unfortunately not be qualifying for some of the different loans that are available. So I do recommend, if you have any questions, Community Futures West is definitely an opportunity for you to connect with them. And again, if you do need that information, it will be sent in an email tomorrow to our members. Other than that, I would like to introduce our speakers. Brandy Horn is a chartered professional accountant with MNP. She has worked in the Airdrie office for 13 years and lived in our community for 20. Brandy has more than 20 years of experience delivering a wide range of taxation and business advisory solutions to a diverse group of clients, primarily private companies. She is currently the treasurer with the Airdrie Health Foundation and has volunteered with other local groups in various roles. Brandy, do you want to give a quick wave? We also have Carmen here with us, and she started her accounting career with MNP in Drumheller, where she began with a focus on agriculture. She transferred to Airdrie in 2010, where she continues to work with business and individuals of all sizes. Carmen has been an active member of the community ever since moving here, and she is currently the treasurer of the Airdrie Chamber of Commerce. The chamber, I can't even say it, and a very proud member of the Rotary Club of Airdrie. Welcome, ladies. Thank you so much for being here. I will turn the floor over to you.
Awesome. Thank you, Marilyn. I will share my screen. So can I get a thumbs up that we can all see this? Perfect. So today we're going to go through the government supports that have come out for COVID for our businesses. Let's see this. So the programs we're going to go over today are the Canada Emergency Wage Subsidy, also known as the CEWS, the Canada Emergency Rent Subsidy, the SEERS, Small and Medium Enterprise Relaunch Grant, SMERG, the Canadian Emergency Business Account, CEBA, the Business Credit Availability Program, the BCAP, and the EI Workshare Program. The Canada Emergency Wage Subsidy As of January 10th, there's $57.8 billion that has been funded. And there's two distinct program periods. So there's the CEWS 1.0, which is periods 1 through 4. And then there's a revised CEWS 2.0, which is periods 5 through 17. And the program's going to run until June 2021. The change in the program from 1.0 to 2.0 is to address some issues that came up, specifically the revenue decrease. So the decrease in period 1 was 15% to 30%. And then the decreases in revenue for period 2 is a sliding scale. The wage subsidy covers the initial CEWS supports up to 75%, and the revised CEWS supports between 65 to 85%, and it really depends on the period that you're applying for. For the key criteria that you need to meet for the CEWS, you have to be an eligible employee, an eligible entity, you need qualifying revenue reduction for a qualifying period, and eligible remuneration. So there are legislative and legislation qualifications that are complex, and they're constantly changing. So those that are eligible, to be an eligible employee, you can be arm's length or non-arm's length. You need to be considered an eligible employee in respect to the week. You have to be employed in Canada by an eligible entity. And then something to note on this one is CEWS 1.0. If you didn't get paid for a period of 14 consecutive days in the eligible period, you would be excluded from the CEWS. And that's because you'd be eligible for the CERB. Non-arm's length employees need to be employed in the baseline to be eligible for the CEWS. And the baseline period, this refers to the pre-crisis payroll period. That's January 1st to March 15th. And then non-arm's length employees, those are those related to you by blood, marriage, or a common law partnership. To be an eligible employee, for version 1.0, you had to be a corporation, an individual, a registered charity, person exempt from tax or non-profit organization, a trust, a partnership, and then for version 2.0, all of the above applies. And then they also added in certain First Nations, certain partnerships with less than 50% ownership, and non-eligible entities, athletic organizations, journalism organizations, or private schools and colleges. For the qualifying revenue reduction, version 1.0 had a hard and fast rule. So I think I mentioned this before, period 1, 15% was a revenue decline. Periods 2 to 4, you needed a 30% revenue decline. For version 1.0, there's a deeming rule that if you were eligible for one period, you were automatically eligible for the subsequent. So say you were eligible for period 2, you'd be automatically eligible for period 3. Version 2.0, this was a sliding scale, so periods 5 onwards is when this changed. And if you had greater than a 50% decline in revenue, you got a higher subsidy. If you had less than a 50% decline, it was tied to a percentage decline. So you get some of the subsidy, but not quite the whole thing. So this allowed every entity with a revenue decline to be eligible. The qualifying revenue definition is the inflow of cash receivables or other considerations arising in the course of its ordinary activities in Canada in a particular period. These inflows are generally from the sale of goods, the rendering of services, and the use by others of eligible entities' resources. These revenues that are excluded would be extraordinary items, like one-time payments that you got, such as grants, amounts on an account of capital, amounts from persons or partnerships that the entity was not dealing at arm's length, and then amounts that you received for the CEWS or the 10% temporary wage subsidy. The qualifying periods, CEWS 1.0, 1 through 4, and that runs March 15th to July 4th. The reference period when we're looking at revenues are March through June. And then CEWS 2.0 are going to be periods 5 through 17, and that runs July 5th of 2020 to June 30th of 2021. Something to note in this is that there's two approaches. There's a general approach, and what that is, it's going to take the reference period of 2020 and compare it, the month, whether it's 2020 or 2019. So if you're looking at, say, July of 2020, you're going to compare to 2019. And if you're using the alternative approach, you're going to compare that to the January, February average. Then for periods 13 through 17, they haven't actually released their reference period details. Eligible remuneration, this includes salaries, wages, or commissions. So it has to be paid in respect to the week of the qualifying period, which means items such as bonuses, you have to allocate that to the period in which it was earned, or in the period in which it to respect of. This also includes employee benefits on which source deductions are remitted. So that would be vacation pay or other taxable benefits. For non-arm's length employees, they can exceed the baseline remuneration. So you can't all of a sudden start paying someone that's related to the company more than what they got paid in the period of January 1st to March 15th. The Qs actually also completely excludes any non-arm's length employees who did not work prior to March 15th. And by that, they mean any non-arm's length employees who weren't on payroll from January 1st to March 15th. The Qs will cover wages for laid off employees who are rehired or paid retroactively, and it does not cover payments for contractors. So for the Qs 2.0, any eligible entity with revenue decline is now eligible for period 5 onward. And there's two components. There's the base subsidy, so that's based on the 1 month comparative, and then there's a top-up subsidy. So if you greater than 50% revenue decline, it takes a 3-month average in the reduction. And the reductions are determined based on a percentage. So there's different rules if you're greater than 50% revenue decline versus the sliding scale of a less than a 50% decline. And then period 5 onward, the baseline is only relevant for non-arm's length employees. Eligible employees that aren't paid for 14 or more consecutive days can still be applied to the program. And then the deeming rules are different. So for period 5 onward, the deeming rule is like, if the prior period revenue reduction is greater than the current claim period, then you would use the prior. So say your prior period revenue reduction was 15%, and the current year, sorry, other way around. Prior period is 25%, the current period revenue decline is 15%, then you would apply the 25% because it's greater than. For the application administration, the applications must be submitted for each period. The deadline for periods 1 through 5 have a fast approaching application deadline of January 31st. So that's 2 weeks away. And the next application deadline is going to be February 25th, and that's for period 6. After that, it's 180 days from the period end. All of this is administered through the Canada Revenue Agency. You apply online with your MyCRA account or represent a client. There's appropriate documentation, so you need to make sure you're keeping all your backup to support your revenue declines and your eligible remuneration. And subsidies received in respect to a period will be taxable in that period. So that being said, if you have a December year end and you don't apply for your period 10 until January of 2021, the subsidy has to be accrued in your December 2020 year. And there are also elections available that you can actually increase or make yourself eligible for the Qs. The one, I think I touched base on this already, the general versus the alternative method, and that's comparing the 2019 to 2020, or the alternative comparing the current period to the January, February 2020 average. Consolidated or unconsolidated statements, the cash versus accrual method, greater than 90% income from non-arm's length entities, and then if there's been any assets or acquisitions or amalgamations. So something to note is period 1 through 4 can be elected differently than period 5 onward. Once you elect for something in period 5, you have to keep it the same all the way through. We do have some reporting requirements, and that's on the TWS, that's the 10% wage subsidy. So all employers that have a payroll account are required to file the form PD27A. It's a self-identification form for employers, and it indicates how much of the TWS was claimed in each of your pay periods. If you didn't claim anything, even if you have a payroll account, employers are required to submit the form indicating a $0 claim. payments that are received under the wage subsidy or EI Workshare, they actually reduce the queues. The server payments may be required where employees are rehired. For 2020 T4s, there's going to be an additional section that has to be reported, and those are boxes 57 to 60, and that's for the queues. And then two things on the queues is they're not going to withhold those payments if you have any outstanding debts or if you have unfiled or outstanding returns. I'll get Brandy to join in for the rent subsidy.
Thanks, Carmen. So the Canada Emergency Rent Subsidy, this was one of the newer ones that just came out at the end of November. So applications just started on November 30th. And they did go retroactive to September. I'll get you to move down, Carmen, a slide. So the legislation started on November 19th. It allows both tenants and property owners to apply for this subsidy. The program will provide rent and mortgage support from September 27th until, it looks like it's going to be extended until June of 2021 as well. So it's going to tie in with the wage subsidy. And again, a lot of the rules under the rent subsidy, they mirror what the government put in place under the wage subsidy rules. So a lot of the definitions and the rules that we'll run through are going to be the same as what Carmen just went through for the wage subsidies. And again, this program is managed by the Canada Revenue Agency. So there's two subsidies under, or two sets of payments under the rent subsidy. The first is the base subsidy, which is a maximum of 65% of your rent that you paid from September to December, and we're still waiting on some rules on the extension until June. And then there's what they brought in, the lockdown support. So if a business has been subject to a lockdown like a lot of ours are right now in Alberta, they can get an additional 25% top up if they either shut down completely or their activities are what they're calling significantly restricted by a public health order. So I think the definitions, the closest one I can get is like our lockdowns are basically like our hair salons, barber shops, those type of businesses where their doors are closed and they're not even allowed to open. And you're significantly restricted would be more along the lines of our restaurants where they can still do takeout and delivery, but they cannot have any dine-in customers at this time. So the maximum amount of rent subsidy that can be claimed for each business is $75,000 per location. So that's per period or per month. And the maximum amount that can be claimed for what we call affiliated group, so this is where we have more than one company owned by the same people, is $300,000 per period or per, it's not a month, it's 28 days, but per month basically. So here's kind of our claim periods that we've got right now. And so we call it period 8, 9, and 10, but if you're looking on the government website, they're going to call it periods 1, 2, and 3, just for our own, keeping it simple. We've kept it the same numbers as our wage subsidies so we can keep track of it. So these are the periods that you can apply for. So the first one was September 27th to October 24th. And then 9 and 10 is basically up till December 19th is what we can apply for at this point. The maximum amount of the benefit that you can get is somewhere between 0 to 48,750. So where that 48,000 number comes from is the maximum amount eligible, which is 75,000 times the 65% rate that they're allowing for the subsidy right now. And then the affiliated group, same thing, 300,000 times the 65% is 195,000 is the maximum that can be received through the subsidy. For the lockdown or top up benefit, it's up to $18,750 per location with no cap on the number of locations for that part of it. And there's no minimum revenue decline. But the calculation will be based on the amount of the decline. So this is quite a difference and quite a huge change, good change from the first program that the government brought out last March, where you were required to have a more than 70% decline to be eligible for anything. And that was kind of a hard and fast number as well. So you either had over 70% and you qualified for the subsidy, or you didn't and you got nothing. So the sliding scale is a huge change that's going to benefit a lot of businesses. So highlight to kind of discuss some of these already, just the fact that any business with a decline can qualify now. Revenue reductions and your calculations are going to be the same pretty much as your wage subsidies. Same kind of concept where you're comparing either your month to the same month in 2019 or an average of your January and February 2020 revenue. So we like to look at kind of both and see which one gives us the biggest decline. And some of it's a bit of guesswork because once we're locked in, we got to look at what we think the next couple months are going to do as well. With the first program, there was a lot of issues with that because the landlords were required to apply for it. So tenants couldn't apply for it directly. And, you know, there was some issues with landlords either not wanting to apply or they just didn't know if their tenants were eligible. But under this one, it's the tenants that can apply for it directly, and they will receive the money directly instead of it going to the landlord. The only caution on that is that when you apply as a tenant, you are signing a form saying you will pay that rent to your landlord within 60 days of receiving the money. So it's just basically making sure that tenants can't receive the money and not pass along the funds to their landlord. So the criteria for the rent subsidy, again, pretty similar to the wage subsidies. You're using, the periods are the same, the revenue numbers that you're going to use are the same, your reference period and your reductions are all going to be the same as what you used for the wage subsidies. The eligible entities, again, they're the same as the wage subsidies. So you can, if you were eligible for the wage subsidy, you can be eligible for the rent subsidy. And then qualifying periods, again, same as wage subsidies, and what you're using for revenue is the same as the wage subsidies. So for that first rent subsidy period from September 27th to October 24th, you're using your October revenue to kind of decide whether or not you have a decline to be able to apply for it. There's a couple exceptions in here as well. The calculation of revenue is the same, again, as what the wage subsidy is. So no differences there. You don't have to include anything that you receive under the wage subsidy as revenue when you try to figure out what that number is. So they're taken out. So it's the same numbers that are used. And then prior reference periods. Again, it's that same thing that Carmen was discussing. You're either comparing it to the same month in the 2019 year, or you're using an average of the January, February. But like the wage subsidy, if you decide in period 5 onward that you are going to elect to use the average of your January, February 2020 revenue because it's the higher number, then you have to stay with that from periods 5 through, it looks like 17 at this point. Now, the only difference with the rent subsidies is, so the general approach, like for that period, September to October, we can compare, we have 2 months that we can use as our comparisons. We're either using our October 2020 and comparing to October 2019 under the general approach, or we can use our September 2020 and compare to September 2019. So you just kind of want to look at both to see what gives you the biggest decline in your revenue. And under the alternative approach, you're comparing to your January, February 2020 average, but you can use your October or your September numbers for that October claim. And then for November, it just goes up a month and keeps changing. But we do have a little bit more flexibility in which revenue we're using for this program versus the wage subsidies. So the revenue reduction, basically once you decide how you're going to, or which method you're going to use to calculate that decline, if you have a greater than 70% revenue decline, your subsidy under the rental subsidy program is going to be 65% of your rent. If it's between 50% to 69%, the amount that you're eligible for will be somewhere between that 50 to 63.75%. And if you're less than 50%, the calculation works out where it's like 80% of the revenue decline percentage. I will say the CRA actually does have a very good calculator online to help out with these calculations. So once you have all the numbers, it's putting it in there and they can do the calculation for you. So here's the formula if you're less than 50%. But on the top up percentage, if you have a greater than 50% revenue decline, then you will also be eligible for that 25% top up. So qualifying renter, it just has to be, a company or those other list of eligible entities like partnerships, registered charities. Same deadlines on when you have to file for the wage subsidy. It has to be filed within 180 days. So the first one will be due, I believe, in March. And there's a form that has to be signed, an RC 665. So this is a form that basically you sign and you keep in your files, because if you're audited, the government is going to ask for it. And you have to meet some conditions, like you have to have a business number, or you had a payroll account number. That would be more for some of our sole proprietors. If you purchase business assets or amalgamations, there's other set of rules for that. And then they have this or other prescribed conditions built into their guidelines, but there really isn't any at this point. So I think it just left them open to make changes as we went. So for qualifying properties, so you have to be paying rent on basically land or building. You have to use that land and building in your ordinary course of business or your ordinary business activities. Properties that do not qualify is personal use property. So you can't, say, for instance, have your business pay rent to yourself. If you're running a business out of a home, they're not allowing that. And you also can't claim the rent subsidy if those properties are used to earn income from other people. And the reason for that was they just wanted to make sure that the rent subsidy never got doubled up, that two people were claiming the rent subsidy on the same property, because it should be the tenants at that time applying for the rent subsidy. Qualifying rent expense, so maximum amount as we went through is $75,000 and $300,000. And the amounts that qualify are, it has to be paid to an arm's length party, so it can't be to anybody kind of related to you or a business related to you. The expense has to be in that period. There has to be a written lease agreement. And if you are subleasing that property to anybody else, you have to reduce the amount of your rent expense by the amount of income that you receive from that person that's subleasing property. So rent is basically anything you're paying to a third party. So it's base rent, operating costs, property taxes. The only things they're saying that are excluded is GST, obviously, because you claim that back on your GST return already. And from CRA's point of view, what you're allowed to claim you have to be really careful that it's in your lease agreement. So they're going to look to the lease agreements to see what you're actually eligible to claim. If you own the property, you are also eligible to cover or apply for a subsidy. And under this one, you can claim property taxes, insurance, and interest on your commercial mortgage. And they do have a limitation on the mortgage interest. And I think it's just what the rules are put in place is that if you bought the property, had a mortgage, but then let's say 5 years later, you decided to refinance it, they're not going to give you the interest on the additional refinancing. It's only limited to what you originally paid for that property to begin with. This slide just kind of summarizes what you could be eligible for. So again, depending on your rent expense, but these are the maximums. So if you're revenue decline is over 70%, the maximum amount you can get is at $48,750. If your revenue decline is only 10%, then the maximum amount you're going to get is $6,000, but it depends on how much you're paying. On the top up or the lockdown support, so this could be up to 25%. They are prorating it based on the number of days in that period. So for the December applications, like when we filled out some for Alberta in December, we only got a couple days or a week of this top up because of when the dates of the public health orders were issued. And you actually have to put those dates right in the application form, so it calculates it for you, what you're allowed to have, but they do prorate it based on the number of days. And again, it just has to be that either you're closed or markedly restricted, and the public health order has to be issued by a federal, provincial, or municipal government. It's limited, based on geography, types of businesses, and your risks associated with those locations. Yeah, and then the restricted order is 25% of your revenue. So even if you have a business that has some activities that they cannot do at all, if it doesn't account for at least 25% of your revenue, then they don't count that as you being, markedly restricted in what you can do. So you wouldn't be eligible for the top up in that case. And they basically say that you are not eligible for the top up where your only reasons for revenue decline is that your clients are restricted from traveling to your location. And again, it has that seating capacity in there. So for restaurant, just because it has a seating capacity issue, it may not be eligible for the top up depending on how much of their revenue is from that source of business, I guess. So in the deeming rules, and here's an example of, if our September revenue decline was 27% and our August revenue was 30%, then we would want to use our September numbers, our August numbers, to do our calculations for the September rental period, just because the decline is bigger, so it allows you for a larger subsidy coming back. Timing, I was wrong. The first application will be due by April 22nd. So it's 180 days after the end of the period, the government period, not the end of the month. So important to remember. And of course, if you disagree with what the government's giving you, you always have 90 days to object to them from the date you get the money or the date that you get a notification saying that they're basically disallowing you for it. And then documentation. So when you apply for the rent subsidy, you actually have to put in the name of your landlord, and you have to provide a name and contact for the landlord right in the application form. And if you don't have that, it just won't even allow you to calculate what you're eligible for or submit the application. So have that information handy when you're applying. Affiliated entities, we kind of touched on this quickly. It's basically where you have a group of companies that are owned by the same people. So if you've got one person that owns 5 companies, they have to share this rent subsidy, the maximum's at $300,000 between all the companies. So you actually have to decide how much you're going to allocate to each location or each business when you fill out the application. And so it's just a matter of making sure that your paperwork's the same, so that when you do the application, you have all of them filled out the same. And I think I was watching a CRA presentation yesterday, and they basically said if there's any conflict between 2 companies when they file for the rent subsidy and they don't fill it out to say how much they're allocating to each company, they're going to assume that each company gets 0 until you fix it. So it's really on you to make sure you're consistent. And then this is just a definition of affiliated. Like I say, it's just who controls the companies and if they're all in the same group. So this program, like I say, it was a huge change in November, some great changes, because we didn't have a lot of people that actually qualified under the first program. where now we have a lot more that are qualifying under the second rent subsidy program. And just a reminder, CRA's got a great spreadsheet, or they've got a calculator on there that you can go in and see if you think you're eligible, what you might be eligible for. And you can use that calculator on their website without actually submitting anything. So it allows you to go in and kind of play with the numbers and see what you could get without actually giving them any information or applying by accident when you don't mean to. So that's everything on the rent subsidy.
Hi again. I'm going to kind of touch base on a couple things for the Relaunch Grant. So it was originally introduced with a maximum of $5,000. It is a grant, so it is taxable, and it's based on a revenue reduction in either April or May of 2020. So the original requirement was a 40% reduction, and that was comparing April or May 2020 to April or May 2019 or to February of 2020. So to get the full $5,000, you needed to have at least $333,000 or $33,000 income, and that calculates as 15% times 33,000. The original application deadline was March 31st. And then as of November, when they had the new announcements of all the shutdowns, they enhanced the program. So the revenue reduction is only required to be 30% as a result of, the reduction has to be as a result of the public health orders. And they've increased the support to $20,000. So there's a second payment available of $15,000. And it'd be pretty straightforward as long as you were affected by the public health orders announced as of November 6th. Go forward, you take your initial grant times by 3 to get a maximum of $15,000. And health orders are available on the government website, so they've constantly been changing. Some of them have been replaced with other ones. Just make sure it's something you look at before you do apply for that second payment. And the applications for this, they started in December 14th. You need to be an eligible organization for this. So to do so, you needed to be a corporation, registered partnership that was registered under the Partnership Act, a sole proprietor with a trade name that was registered. I think this one will catch some individuals that run a business and don't actually register that trade name with the registries. You could be a corporation incorporated under a special act, a nonprofit registered under a special act, a nonprofit registered under the Companies Act, a society, or a cooperative. And there's a little note here at the bottom about chambers. They should be registered under the Board of Trade Act. And then with the legions, they should be registered under the Act to incorporate. To calculate, so the way this works, this is actually on the guide that the Alberta government has available. Your pre-COVID revenue, say it's $25,000, and the source for this example is April of 2019. The COVID impacted revenue for April of 2020 is $13,750. So the calculation works out that you take your $25,000 less your COVID revenue of $13,750 divided by the $25,000 times 100. And in this case, the reduction is going to be 45%, and you just need to be greater than that 30% to be eligible. To calculate how much you get, you take 15% times the $25,000. That's your pre-COVID revenue. And then you get $37,500. So you cap out on this one at the $5,000. And then for the second payment, you just multiply that $37,500 by 3, and then you get $11,250. So people that didn't, or entities that didn't apply for the initial program, you can apply for the $5,000 now that they've revamped the revenue decline percentage, and you can actually apply for the $15,000 in the same application. The applicants that submit an initial application, they're going to submit an application indicating the application is for the second program, so you just have to be clear with that. And then if you participate in any of the other federal programs, you are still eligible to participate in this program. The Alberta government does have a pretty great step-by-step instruction on how to do this on their website. One of the things that they do require is that you register for a My Digital ID to be able to start this application process.
Okay, and then this one's going to be quick because on the SEBA loans, or the emergency business account that they brought out first last year, I think most people that were eligible for that first 40,000 have gone through and done the application to this point. But basically the government was providing an interest-free loan of up to $40,000. And if the loan was repaid before December 31st, 2022, you were eligible to have $10,000 of that forgiven. So in December or November, they announced they're going to extend that to another 60,000, or 60,000 total. So you could get another $20,000. And if you repaid that by December 31st, 2022, then another 10,000 would be forgiven. So the only catch to this is that when you receive the money, that 10,000 becomes income in the year you receive it. So if you got the SEBA loan in 2020 and your year ends December 31st, we are including that $10,000 as taxable income on your returns in 2020 and not in the year that it's actually forgiven. So if you have to include an income in 2020, and let's say 2022 you don't repay it, then you almost have to reduce your income in that year or go back and amend 2020 to take the 10,000 out of income. So it's not really practical at this point to amend your 2020 return. But yeah, it is income when you receive the money. Same with the 20,000. If you got the extra 20,000 in December, then you actually have 20,000 that's going to be included in your income for 2020 and not just the 10. So the business credit availability program. So these were just some extra loans that the government put out to help smaller to bigger sized businesses, medium sized businesses. A lot of these were being administered by the EDC or BDC, and there's applications with your financial institutions. You were able to apply for more money under these programs. There was more work to go with it though. So for instance, they wanted interim financial statements. They wanted the last 3 years of your financial statements prepared by accountants. And then they want a monthly cash flow forecast as well. So they just wanted to see what you were planning on doing with the money and whether you could actually afford to pay it back. So this program is still available until June 2021. And so one of the bigger ones was the Business Development Bank of Canada. They were given $40 billion basically to push out to small businesses. Loan limits were based on pre-COVID business revenues. You could get 80% funding from the BDC if your existing bank matched it for 20%. And the applications are made through your bank that you deal with now. So again, this program is available until June 2021 to apply through your bank.
The last little slide here we have is on the EI Workshare Program. They created this to allow kind of split up some of the payments to your employees. So the program's supposed to provide support for employees who are eligible for EI and agree to reduce their normal work hours. The program is extended from 38 weeks to 76. It's available to businesses after their first year of operations, preserves workforce during shutdown or slowdowns. That way you don't have to lay everyone off, you just reduce their hours. The application and adjudication, that's all done through Service Canada. It's fairly streamlined, so 10 days prior to the commencement of the program. The definition of the work sharing unit and equal sharing of available work. And then the reduction of work must be at least 10% and not more than 60%. And that's got to be on an average for all the employees receiving the benefit. And the last point is the agreement has to be a minimum, it has to be at least 6 weeks long. And that would be the last of our slides.
Thank you both. My brain is hurting a little. That is a lot of information for everyone, but thank you so much. It just goes to show how fortunate we are to have professionals like you available. There was a pre-submitted question that I will start with, and then we've also noticed quite a few in the chat box. Thank you, Tara, for submitting those. What we'll do is I will, for the sake of time, we have 12 minutes left. I will just start with the pre-submitted question, which Carmen and Brandy do have. And then we will ask Tara to just unmute your mic after, and you can also ask your questions. And if anyone else has a question, you are welcome to type it in the chat box or simply use the raise hand function. And then we will call on you to, of course, participate in the Q&A. So the first question is, it was submitted by a health organ. Bear with me, I'm looking. It's a long one. It was from a health and wellness business that opened at the end of November 2019. And of course, we're still in the early stages of business. Due to COVID restrictions, the business was closed for 3 months in the spring and again this December. During this time, they had to close or operate business at a much less capacity. The question relates to the CERS and clarification regarding, of course, the rent subsidy and how it was calculated. So, ladies, do you have the question in front of you, Brandy, Carmen?
I do, yeah.
Brandy, you're the pro, so I will let you speak directly to the rent subsidy and how they would calculate it to the best of their ability.
So in this circumstances, because they opened in November 2019 and we're just starting to ramp up their business, they really don't have great comparables, right, to figure out the rent subsidy. So the question was, if they use the general method for 2019 or 2020, November 2020 rent subsidy, they're technically comparing to November 2019, which, when you're a startup is probably not a lot of revenue. So your comparison's already low. And what they were saying is that, because they'd been in business for a year, their revenue in November 2020 was higher than November 2019. So under the general method, yeah, they don't qualify for the rent subsidy if you use that calculation. So then they asked the next question, well, if I use my January, February average, and so it's not taking one of January or February, it's taking the average of both months and compare that to the November 2020, their November 2020 was still higher than the average of the January, February average because, again, they've been in business for longer, so they were able to increase their revenues. So unfortunately, again, under the alternative method, they are also not eligible for a rent subsidy because the numbers just don't work, right? So I think the question was basically, are they confirming they're right on that? And I hate to say, yes, they are right. And it was one of those situations where, unfortunately, they kind of fall through the cracks of what is available under the rent subsidy. So alternatives to look at is, the Community Futures program. It was, I've had a few startups go through that and it works really well. But again, some of them are grants, some of them are loans. So it's something you're gonna have to pay back. The SEBA loan, if they can apply for that and get that additional $20,000, it'll help out. And at least that gives them $20,000 that can be forgiven. But they're still going to have to repay the 40. And then the only other option really was the Alberta Relaunch Grant. So trying to go for the other $15,000 that they brought out in November. But as it stands with those circumstances for the November rent subsidy, no, they're not eligible for it. Now with the program being extended till next June, everybody should just kind of watch the numbers every month to see, just because you don't qualify in November, you may qualify in December or January or February the next year. So, but unfortunately, yeah, in this case for the November, it doesn't work. And there's nothing in the rent subsidy rules to allow for kind of startup businesses where the numbers don't work for the equations, right? So.
Thanks, Brandy. I was afraid that's what you were going to say.
Yeah, I tried to find an out somewhere, but there was none.
No, I appreciate that. And Tara, if you can just bear with us, we actually do have Patty J with us. She just joined us a few minutes later into the call. So Patty J, we did just speak briefly about the funding that is available. If you could actually elaborate more on that and what businesses can turn to you for questions.
Certainly. I apologize for being late. I had another meeting that ran over time, so I was closing one and opening another. So Brandy made reference to the Rural Relief and Recovery Fund that was created somewhat after the CEBA loan, after the government discovered that quite a few businesses were slipping through the cracks for one reason or another. So this came in late spring, and I think we dispersed our first clients through the first funding round in June. So when we talk about rural, the federal government, these are federal funds, and they were put through Western Economic Diversification, which is our funding agent. So we, as a Community Futures organization in Alberta, one of 27, have a contract through WD to disperse the RRF funds in Alberta. So my head was spinning when I was listening to all the rent formulas, et cetera, et cetera. Ours is quite simplistic. It's a maximum of 40, and as Brandy made reference, it's interest-free till December 31st, 2022. For example, if they took out 40, they paid back 30 by December 31st or before December 31st, 2022, that $10,000 would be forgiven. As a lot of people were falling through the cracks in the rent subsidy, that is included as one of the eligible expenses in the RRF loan. So for example, salaries, benefits, property laws, rent, or property taxes, rent, cleaning supplies, bank interest, lease payments, professional fees, insurance. And this is a unique twist, is other eligible expenses associated with retooling, rethinking workflows, automation, robotics, or developing new markets. So for those businesses that were a storefront retail who went online, there was money available for them to retool their business to have a digital platform. So one of the criteria is that the small or medium-sized enterprise must have been viable as of March 1st, 2020. If you were incorporated, you must be incorporated by March 1st. And you have to demonstrate through cash flow or bank balances that your business was really adversely affected by COVID-19. That means that we should see your revenue doing this one after March. We now, our own CF, have dispersed almost $4 million in funding. So we have been one busy little organization. In Alberta, for example, I can give you some really interesting stats. Alberta was the province, unfortunately, that had the most need. So we were already in trouble because of the downturn of the oil and gas sector, and then COVID-19 hit. So we were, out of the 4 Western provinces, one of the provinces, or the only province that was hit the hardest. So for example, in Alberta, as of, I guess it would have been January, we've dispersed, just in Alberta, $40 million alone. In Alberta, we were able to maintain 5,122 jobs. Due to the funding that Community Future Centre West dispersed, we were able to maintain 366 jobs just in our region alone. So we also have heard rumor that we potentially are getting another $20,000 for those clients who have maxed out that $40,000 threshold. We are just waiting for the official release of that announcement. I would imagine that would happen within the next few days. So that program has been keeping us really, really busy. Just to be clear, the RRF program is a program developed for rural, for Community Futures, but WD is dispersing rural Alberta funds out of their Edmonton and Calgary office for businesses that are urban as well, and for businesses that want more than 40. So one could imagine there was a little bit of confusion. We were getting Calgary businesses applying and sending them back to WD, and WD was getting rural clients and sending them back to us. And so it seems to have sorted itself out, but we continue to see an influx of applications. And once the $20,000, or if the $20,000 top-up is announced, we expect that probably about 80% of our portfolio will be requesting the $20,000 top-up to the $60,000 threshold. Ours is a little bit different than CEBA in that in Alberta, we have decided that the repayment percentage is only 4%, not 5%. The additional 20 that if clients can pay, if clients apply for that, will also be at 4%. That is a 50% forgiveness if that money is repaid by December 31st, 2022. So that's a significant forgiveness. I honestly have never seen anything where it's 50% forgiveness.
Thank you.
That, go ahead.
My apologies. I just wanted to note that I did put the link in the chat box for everyone to see. And as I had mentioned, we'll be sending out an email tomorrow to our members. Do you have any, just for the sake of time, Patty J, do you have anything else to add?
No, if you're specifically in our region, it's centerwest.albertacf.com. I'm not sure where everyone is here. I think it's probably for more than just maybe our region.
And if you guys have any further questions for Patty J, please reach out to her directly or send me an email, and I'd be happy to send her her information. I know we've already approached the 2:30 mark. So Tara, I know that you had a few questions in the chat box that we would like to get to, and then one following by Emma, and that should probably wrap up our event. So Tara, can you please unmic yourself and go ahead and ask your questions?
Yes, so Carmen, I had this question while you were speaking to Q's. I believe it was Q's. The 3 months that they use for the top-up subsidy. What are the 3 months that they're using for that? Does it change for each application period?
It's the 2 months prior to the reference period month. So if you download that Excel document, there's a calculation on the Q's website. If you download it, it actually will show you which months depending on which period you're applying for.
Okay. And then my next question, I believe, was for Brandy. So for the rent subsidy, I am arm's length, and I've been having trouble getting questions answered. I've attended multiple CRA webinars, I guess. Yeah. I'm trying to figure out how to apply for my holdco, which owns the mortgage, and my operating company, which pays that rent to pay that mortgage. Has there been any changes in that in the last couple weeks?
So no, I mean, it is the holdco that has to apply for it. Okay. So your operating company can't apply for the rent subsidy. It is the holding company. And Carmen actually might be able to speak to this a bit better because she's actually worked through a couple of these now.
We do have, we've run into this a few times because there's quite often the opco is owned by the same person who owns the holdco, who has the land and building. There's actually an election form that you can file, and what it does is it allows the holdco that has the land and building to apply for the subsidy, but it uses the opco's revenues to qualify for the revenue decline.
Okay.
So you're still eligible, it just can't be done through the opco because you have the non-arm's length rule, but yeah.
Okay, so then I think that was my next question, which was the affiliated entities. So it's the holdco that applies with the opco numbers.
Yeah, you'll still have to list, when you fill out the form, you'll still have to list both companies in there because they are affiliated. But you can assign basically 0% to your operating company because it's not going to apply for anything anyway, and 100% to your holdco, just to make sure that the government knows you recognize you've got more than one company and that there is an affiliated entity in there. But yeah, I would just assign 0 to the OpCo, 100% to the HoldCo, and then apply for it that way.
Great. Thank you so much. Those were all my questions, Marilyn.
Thank you so much. There was just one comment from Emma. Emma, did you want to speak directly to the ladies at MMP? I know you had asked whether or not they would be available. Emma, do you want to say a few words? Do you have a unmute your mic? Just
the only thing I want to say was thank you all for the information. I'm a new business owner. I started in April. Got the wrong foot, you know. It's because when we started a business, I thought it's just a 2-week gig, you know. They say, we quarantine for 2 weeks and everything is gone, right? So it's a wrong foot on a wrong door, right? So yeah, I need a big help, and I am thankful for all the information. But there's more complicated on this business. This business is running for 9 years, and I took over it. And I wish somebody can help me, you know, open up some doors for Subsidy. But with this webinar, I'm very, very thankful to everyone. You know, you're helping small businesses and people who doesn't know all the rules and all the loopholes on the system, right? Thank you all. Thank you very much.
Thank you, Emma. And we actually have Rebecca Nielsen on the line as well. Rebecca is with the City of Airdrie. Rebecca, I don't know if you could speak at all to the Right for Business support program, and potentially if there would be more opportunity for Emma and our other members to learn from.
Sure. I think that perhaps Emma has actually been connected with our department. We have been closely tracking our clients because we have a number of inquiries that are coming in right now. So the Right for Business program ran from May 2020, and the application period ended the end of November 2020. That program is currently under evaluation, but from the municipal government perspective, we do anticipate that by the end of January, we will be bringing forward more supports for business. We just really want to make sure that we are taking care to provide those businesses with the support they need. So we wanted to review the work that we had already done and make sure that we were providing something that people could actually use going into the future. So Emma, we certainly we will keep in touch with Emma, and we will let her know just as soon as anything new is announced.
Thank you, Rebecca. And thank you again, Carmen and Brandy. Everyone here is so supportive of our business community. It's nice to see a few people smile and try to support one another and get through these very, very difficult times. And we will be continuing our workshops as the Chamber of Commerce moving forward in the next few months. Again, topics will be very much surrounding COVID and different supports available to business. The next one is on January 21st, and it's titled The Future of Your Business HR Guidance. So again, look at our website for those regular updates. We will continue to share our partners' information. And of course, if you do need more information, feel free to reach out to your chamber anytime. We're here for your support. And we wish you all the best. So thank you again, and we look forward to seeing you all virtually and hopefully in person sometime in 2021. All right, everyone, be safe. Thank you.